Good afternoon, everyone. BC Richfield here, coming to you live from London after a cheeky little morning of technical issues. So do apologise if you've been waiting around for the last kind of 4 or 5 minutes while we've just been getting online. Just slight issue with the broadcasting software this morning, but hopefully all fixed now. So do let me know if you can hear me okay and if you've got the visuals all right, and then we'll look to get the show kicked off. Craigie boy, how are you doing? Finally back after your travels, hopefully to some rather nice exotic climes, my friend. Maybe you brought a little bit of this sunshine back with us, because it is absolutely balmy here today in London, and it is just a simply beautiful day. Finally got a little bit of the warmth starting to flush through, which is always an absolute treat. So how are we all doing today? All good? Okay, just got a bit of confirmation that apparently the visuals and the audio are good. Thank you very much to our back-end legends there, absolute stars. So, what are we looking at today? Well, I'm going to cover the news and general bits and pieces like we always do, right? Going to obviously take a look at Bitcoin as well and kind of run through all of that. We do have some key news events that we want to keep our eye on. So I think we'll probably best to start with this, let the numbers start to trickle in. Now, this for me is really, really important. Call me Sledge, hello mate, and Craigie boy, thank you very much for the confirmation. Now, this is really important for me. So what we're looking at here, for people that maybe aren't familiar, are high impact news events. Super Shogun, hello my brother, how are you doing? Good to see you again. So these are the high impact news events that are coming in now. Yes, obviously these are aligned. I focus heavily on the United States and the US, and they're also aligned with traditional legacy or equity markets as such, really FX, stock markets, Forex markets, etc. Now, what are we looking at? Well, the red folder news we're focused on this week, looking at it, starts off on Tuesday. So remember, 1st of April, tomorrow, we're moving into a new Q. We've got a new month ahead of us, looking at the monthly close coming in today. We're also dealing with a Monday, which can be a turbulent day to trade anyway. So with all of those factors lining up, remember, a lot of funds are coming into the end of month, etc. So always a good time to kind of show a little bit of caution. And then when we look at what we've got dropping in terms of the news, we can see that we've got ISM manufacturing PMI and JOLTS job openings as well tomorrow. So they can really look to inject some volatility into the market. It's a little bit of a mixed bag at the moment when we're looking at the US economy. Obviously, GDP came in marginally better than expected, but overall there is that kind of feeling. Obviously, PCE on Friday wasn't overly positive. We saw some amazing prints from PPI and CPI weeks previously that just didn't manage to materialize into that catalyst that so many people were looking for, to inject a bit of life back into the risk markets. All right. However, the flip side is that we're in a very news-driven market at the moment. The markets typically don't like too much uncertainty, with news still to be finalized on tariffs, trade policy coming out of the US. Obviously, we have quite a volatile administration there as well with Trump. And especially with people like Elon Musk as well, who have very, very, very large audiences that they can get to, which can cause a lot of turbulence in these markets. Now, ultimately, we need to remember heading into Q2, the US is facing a lot of debt refinancing. So what we're looking for on that front, if you're looking for a resurgence in risk assets such as cryptocurrency, what we're really all looking for is for the bond market to come down. That's what Trump really wants. That's what I don't want to say the US as a generalization, but I think overall, if we look and we kind of pin that focus on Trump here, then I think what we're saying is, okay, why does he want bond markets lower? Why does he want the dollar lower? Ultimately, it's because of trade, and it's the bond side, the treasuries, is all about the fact that the US are about to refinance trillions of dollars of debt. So what does that mean? Well, it means that when they buy their own bonds back, they don't want to do it at a very high yield rate. So we're going to take a look at that in a minute. That's where we're going to start. We're going to plug those factors in. And as always, the key questions we're asking ourselves as we start the week is, are we macro bullish, macro bearish? And what plays can we find that align themselves with that narrative? All right. So I hate you here. Hello, mate. Good to see you. So with that, going to finish up on this quickly. So we have ISM manufacturing PMI and JOLTS job openings. They're coming through on the 1st of April, which is tomorrow. Wednesday, we can see here we have ADP non-farm employment change. This is another key metric that is going to be really, really interesting, not just for Trump and what he wants, but obviously for the Fed. Ultimately, I think Jay Powell and the team over there have done a good job at getting inflation down. It's not a million miles away from their 2% target. But all of this data needs to be accounted for. You have a relatively neutral Fed at the moment. I'm talking about obviously the Federal Reserve in the United States, right, who set the monetary policy. Trump wants a looser monetary policy. They're concerned about that because ultimately that can drive inflation back up, which is what they're really trying to combat. Now, the situation you have when you have a risk-off environment like we have now is a lot of the money from the major participants moves into defensive stocks, right? Moves into the dollar, moves into bonds and treasuries because you're getting that yield, you're getting that return. While that return is appealing, I think round about 4.5% on the moment on the twos, around the twos and tens. That's a really decent return if you're going to park a lot of money there, and it's very, very safe money because you're buying US debt. Okay, what we really want to see is a point, and what this whole thing is bundled under is, this kind of quantitative tightening, or you hear it as QT. All right, which is where the monetary policy is contracted. The whole point is to bring inflation down. People have less money available, less capital to spend. So what we're looking at is, an environment where risk isn't really that prominent at the moment. So we need to adjust for that, and we need to make an allowance. Aussie Gromy, hello, mate. Robin Hood legend, crypto sucks, bro. Well, interesting to show, to be on, if you really do think that. I'm not sure ETH is going to hit zero, but, I think it can definitely go quite a bit lower. As always, we're not, crypto-centric on this show. We're looking, as you can see by what's on the screen at the moment, you can see very clearly, as long as obviously you open your eyes and are not a total twat, then you can see that we're dealing with the new situation, which is to do with real markets, not just crypto. And I don't mean real in a derogatory sense for crypto, but the markets that are traded with the highest volume, highest money that goes through. So, you're always going to get we rarely get idiots in the chat, actually, but I suppose we were overdue one. So anyway, as we look at this, as we move through on to Thursday, what have we got? Unemployment claims and ISS services PMI. Now, these are looking again to inject a little bit of volatility. Friday, average hourly earnings month on month, non-farm employment change and unemployment rate. And again, as we look down here, what's this real key event is Fed Powell speaks. All right. Now, again, we've had the figures come through. We know the inflation data at the moment. This is going to be about updates, and this is very much going to be about the tone that Powell brings. So, there's certain ways that you can really move markets, and that is obviously, on the inflation print, what they're doing in terms of the economic data, what they're doing with interest rates really controlling the financial markets in terms of a risk on and a risk off perspective. But ultimately, they can also do it with tone. So Powell can take the mic and be incredibly hawkish, which is kind of, more akin with being bearish, right? By saying things like, inflation is creeping up. Maybe the growth data that's coming into the US isn't as strong as we want it to be. Maybe we need to reconsider or reevaluate the amount of cuts that we're going to put into this year. The market typically has 2 25 basis point cuts priced in for this year. If that information is going to change, that can inject some volatility and definitely some movement into the markets. All right, so that's where we are at the moment in terms of the high impact news data. Now, something that I was just talking about that I'm going to cover very quickly before we do move on to cryptocurrency, all right, is the bond market. Now, I know a lot of you probably think, well, I know you cover this, BC, but it doesn't really mean too much to us. Well, it actually should, right? Because a lot of the news that's coming out, if we look, for example, at some of the key news headlines this morning, right? So if we look at maybe, probably more so over the last 12 hours or so, is Trump coming out with a statement on Zelensky saying that he's trying to back out of the minerals deal, right? That again is designed to be an inflammatory comment. You've got more attacks on Tesla sites, which has gone again, linking that in with the idea that people aren't happy with Elon, but a lot of people obviously are. A lot of people think what Doge is doing, Department of Government Efficiency, is a good thing, where a lot of other people don't. So you've got a lot of very inflammatory news at the moment that's sitting around. And the thing with that is it can really kind of inject a lot more uncertainty, and uncertainty, the markets don't like it, and ultimately what happens is things then start to sell off. What have we got on the screen at the moment? We're looking at this case with the bond market. So remember what I said earlier in terms of, these are the US 10-year treasuries, by the way. In terms of what the US want, and certainly what Trump wants, is he wants a lower bond market, all right? Because when the US then need to buy their debt back, which is often what they do when you come into a period of, say, quantitative easing, is when the central banks print money, they're buying their bonds back, but they want the yield to be as low as possible, because if they were buying all their bonds back up here when we were in around 4.8%, that's the yearly interest they need to pay on those bonds to people that have bought them, right? So much better off to reservice that debt as low as possible. So rather than 4.8%, you're paying people 3.8%. Now, one of the flip sides of this is that as the bonds become less appealing and you get less yield, so less interest on your bond holdings, right, on your treasuries, then all of a sudden risk becomes slightly more appealing. All right. And the reason for that is because it can make your money work harder. Now, you don't just all of a sudden reallocate all of your portfolio to risk assets, but it does mean that you rebalance it and you might put more of an allocation towards risk. Now, that happening on a large scale is typically going to be quite a good thing for Bitcoin, because it will be a good thing for the S&P 500, right? It will be a good thing for the NASDAQ, for example. All right. Now, obviously, as we kind of look at this, and we can see what we were looking for here on the S&P 500, we finally kind of got back above this kind of area of support and resistance here. And then as we came in for the retest, we kind of carved straight through. So this is a real sign of weakness. Like we said, not really looking to get long positions on here until we get some kind of structural recovery. You can see by this is exactly what that denotes. We didn't quite get it, but we did come very close. If we look at it here, we got that initial move up, and then price has just not respected this level at all. In terms of liquidity, we've got the lows sat down here, which for anyone interested on the S&P 500 is sat in 5619.4. If not, I think possibly a deeper move down to here. Now, risk markets like the S&P 500, the NASDAQ, especially with the NASDAQ being most aligned with technology stocks, most technology stocks in the basket that makes up the index. We want to start seeing some life come into these in order for that to then be reflected, right? We can see here, for this to be reflected into things like crypto, all right? So just to give you that little overview. Now, I know we're a little bit late to the show, so normally that takes me a bit longer. So hopefully that has given at least a reasonable kind of rundown on that for you. Now, what I really want to focus on here is looking at Bitcoin, all right? We will take a look at a couple of alts before we close the session up. So if you do have any requests, please do let me know. So as we look at this here, let me just show you the weekly quickly. By the way, you can see all of this analysis in the daily Bitcoin report that's released at the Bird Nest. Members get access to that every day, written by a different analyst, to really kind of help give a kind of broader market view on our thoughts on the market before we go into a new trading day, or like now, trading week or trading month. So what were we looking at? Well, ultimately, when price held this bullish gap down here, right, we took out liquidity from this, what you would have to call is an abnormally long wick, right? We saw that massive absorption coming in from buyers here, which pushed the market up. But we took this low. The plan has been, since we recover this low, to expect price to push a little bit higher to around about 50% of the retrace of the leg down. So if we take a look at this in here, we can see we got a clear low here. And here's our high. We can see price came up into this area here, which is where we've identified the daily gap that I wanted to see either violated with price really kind of closing up through it, obviously on a daily scale, not a weekly, or to see it hold as a point of rejection, expecting lower prices. So let me just get rid of this now. Now, what we can see here is we came up into this 50%. We highlighted what the key liquidity was above. Now, what we can see is look how well this gap here did of keeping price suppressed. After taking this high, we failed to make any kind of key closures. A very small one here, but again, look at the wicks. A longer upside wick than a downside wick tells you that's what price tried to achieve, but the selling pressure was stronger than the buying here. So it pushed price back down, meaning that we're ultimately holding this daily gap. Now, when price closed below this bullish gap here, the bullish play was quite simple actually, because we were kind of grinding up here. It was simply, even if we reject for this, look for this gap to hold and then push forward. Because with these wicks rebalancing this gap, then my assumption is price is going to push for cleaner liquidity that's resting above this high. Now, the flip side to that plan was this, which unfortunately, you know, for anybody wanting to see bullish resurgence, we got, which was price rejecting here and then inverting this gap, right? So that was the first point at which, okay, now from here, moving into the weekend was bearish, no doubt about that. I'm not a massive fan of trading weekends in truth. I like the volume and volatility that's there when traditional markets are open. However, when we also then saw the close below this, setting these up close candles here, or these bullish candles, as a bearish order block, a high probability one too, in my opinion, because we've taken some form of liquidity. We've now broken down from here, and we also have a breaker in play, all right? So if we look at this area here, okay, what is this? Down close candle for price to push up. So we would expect this area to hold if this is bullish, all right? You would see this as an order block for price to bounce off here and move higher. This is where the buyers are. Not the case. Again, price closed through this. On closing through this here, this then turns to a breaker, meaning it's the last down close candle, last bearish candle, or consecutive candles before price has pushed up to take liquidity. Closing below here isn't overly a good sign from a technical perspective. It means that price is looking for liquidity lower. So where is price looking for liquidity? Well, this is our first target here, unless, as we do quite a lot, obviously, and certainly as I lead over at the Bird Nest in terms of the intraday trading. From an intraday perspective, I'm interested in price attacking the liquidity below the prior daily lows, all right? But ultimately, this is the key target. Now, when we get here, then how we react is key. Ideally, you want to see a quick reaction and back up, so like a V-shaped recovery. So something like this, a single or just no more than a couple of these wicks that just cannot get in and close below the low, yeah? What you want to be seeing is absorption here from buyers, right? Buyers stepping in, so price is trying to get forced down, late shorters forcing it down. That liquidity is gobbled up, and then price has a reversal. Now, doesn't mean that it's going to be, you know, ultimately a major reversal. It can just be a corrective move, which is why we look to target with our Fibonacci's, right? And yes, of course we can. What have we got? Mastrelex, great name. Yeah, we can take a look at that for you, mate. No problem. Let me just make a note. We'll take a look at Sol. We will take a look at ETH as well towards the end, so we can take a look at how that is getting on. But do let me know if you've got any, guys. I will try and make some time at the end to fit some in. Now, if we get the opposite of this and we get what I would call a strong close below this level, meaning that we see a full body candle closing down here, then we've got this kind of interior low here, but this is the key target, right, which is at 76,651 flat here on Bitget, all right? So the plan is quite simple. Other than intraday plays down to this level, which we would need to do from higher up, as mad as that sounds, obviously, if you're wanting to short into an asset, what you want to do is, if you've got a trend that you're aligned with, then you want to either short the rips or buy the dips, right? If we're bearish here, then it's much more a case of shorting the rips. And what does that mean? Well, quite simply, it means that if you're in a downtrend, or if you've got a bearish bias, and let's just do an example here of a bullish bias as well, make that look a little bit less rubbish here. Right, then you want to be shorting the rips. These are the rips, right? So they're the moves back up. All right, so when price sells off, very rarely does it make sense, and unless you're a very good momentum trader, etc., and you've got conviction, to be shorting when the move is here, as in you're shorting while the move is in progress. You can get into secondary moves at that point. What I'm more interested in is then looking to get involved on these pullbacks. So shorting the rips. All right, so that's just basically a lowdown of what that means. Now, if I'm bullish, then you've heard this probably a lot more commonly, which is buying the dips. Wait for the impulse move, wait for those corrective moves lower, and look to buy into those dips until the market gives you an indication it's moving the other way. Now, looking at this on the 4 hour, how can we kind of formulate this into a plan? Here's the example on a real chart of what I'm talking about in terms of selling the rips. All right, so do this here, just do it in red. So price breaks down here. This is probably your best kind of breakdown level in terms of waiting for that real kind of change, because you've got a few lows in here. Ultimately, price nips up, and then you see that real impulse move down, right? So you see that displacement caused where we see this gap as being left in here. If I just color that in, right, you can see the gap that's through there. Gives you an indication that price is looking to move lower. So pullbacks, all right, so these rips are what give you these opportunities to short. So if we saw something like this into a reasonable level and we get a low time frame setup, then that could make a reasonable intraday trade into there. Ultimately, what we want to see for any kind of bullish resurgence, and obviously the price doesn't have to do that. Price could from here reclaim this level, in which case we could start to look on an intraday basis to build some long positions higher. All right, so that's basically looking at, and Raz is saying looks like a bull flag to me. I love it. Yeah, just the whole thing, Raz. Or so what Raz is talking about here is a really good point, and this is a little bit of a kind of extended one here, right? But what we can see is you've got, let me do this a little bit thicker so you can see it, right? This is like a bull flag, or like, you know, like a rising wedge. So you see price grinding up the accumulation as prices grinds higher. Then obviously these wedge patterns, and don't take my word for it. If you're interested in patterns, please go and either speak to Crypto Bird, which you can do through our Discord. Also, you know, connect with someone like Axel Kaibar, who's probably the best pattern recognition trader out there, certainly the one with the most data and the most impressive data. We're often very fortunate to have him on our yearly trading congress, right? But this is the point that Raz is making here. It's like looking at this and then saying, okay, well, that's bearish here. We've broken down at the bottom of that. That's fine. You can use measuring techniques to show how far or how much lower you expect that to go. But what Raz is saying here is, okay, well, maybe, you know, maybe we've got some kind of bull flag going on here, yeah? So, you know, a falling wedge rather than a rising wedge, you could see this as bullish, and then looking for price to break out of this, retest this, and then start to move higher. Again, someone with Raz's experience will know this really well. And for any of you that don't know Razoom, by the way, I recommend giving him a follow. One of the awesome trading team over at the Bird Nest. We get to work together on a daily basis. Not much this guy doesn't know about volume as well, and things like TPO. So if that's of interest to you, then make sure to come and check us out, because he's got a whole course he can teach you about. But the idea of that being a bull flag there, again, with these type of patterns, what you really want to see are things coming into key levels. Yeah. So if we've got a higher time frame sweep here, and we're looking to make that kind of bull flag or that falling wedge coming into here, and then we do break out of it, it gives you that extra little bit of confidence there as well. Jojo, how are you doing, my friend? A wonderful panda-loving Jojo. Jojo and I and the rest of the team have some great conversations over the Bird Nest. A great traditional market trader, so it's really refreshing for me actually as well, because we do always try and kind of merge the markets over there. So we're not always, you know, so just crypto focused. Not that there's anything wrong with that, but we try to provide kind of a broader view for members and how you can decant macroeconomic data, as well as obviously stock market, equities, FX, etc. So that, you know, you're not always just completely confined to crypto. And also it teaches us a lot about crypto and about the state the markets are in. N19 HCM 4R3. finally a name that I can't mispronounce, hopefully. Do you personally think the market will dump more due to tariff uncertainty, or are you sitting more bullish? I think that's a really, really good question, mate. I really, really do. So pop it up there just for a few seconds so people can see it. Now, my thought process on this is actually a little bit, what would be the right word? Complex, right? Because ultimately my belief is this, so that Trump is creating a lot of friction and a lot of tension in the markets, driving the stock market down, driving equity markets down, driving the bond markets down, and the dollar, so that when the US are looking to refinance, they're doing it from a better position of strength. Now, it's also the case with the trade deals. There's an argument that there's two sides of it, right? One is it's a little bit of a reprehensible way to treat your allies, and also it's a little bit of a bully mentality, especially when you look at the stuff coming in with Vance, you look at Elon Musk coming out and calling war heroes over there, cowards and traitors and stuff, which personally I find disgusting. To always have respect, not just for people older than you, but people that fought in wars, for fuck's sake, so that you can create the companies that you create. Have some goddamn respect for people. But that aside, a lot of this stuff is designed to be inflammatory for that very reason. It's designed to get people annoyed. It's designed to get markets to react. It's designed to inject uncertainty into the markets so that they're kind of ultimately reaching their goal. They want to refinance that debt as cheap as possible. They also want to make as much money from their allies or any trade partners as they can to try and affect their massive pile of debt that they have. All right. You also need to remember that, if anybody hasn't read it, there's some brilliant podcasts out with Ray Dalio recently where he's talking about, the US debt spiral and how they really need to get to that kind of 3% figure with GDP. Really, really interesting. Just look it up if you do, or I think it's on the Odd Lots podcast as well, but super, super interesting. So to answer your question, I think the markets, personally, I feel like the markets are going lower. If I look at Bitcoin here and I say, okay, well, on a weekly scale, where can this realistically come to? Or where, more importantly, is the last place that this was considered, true value? And I think it's kind of around here, right? Yes, it's a little bit of a kind of, freehand drawn box. It's not an exact point. If I was to look at this and say, okay, well, where are the flats here? If I'm looking at the flats of the bodies and what's kind of containing the wicks, is this kind of area around 71,247, all right? Because this was the last consolidation range. When price breaks out of these, what you're typically getting with markets is the search for value. So down here, people consider Bitcoin too cheap, keeps rising. Then after these pumps, you get these points of consolidation, which, decisions are being made, mind is being made up. Is this still considered value by the market at this level? Is there more upside potential? Yes, there is. You see these breakouts. Then you get these larger consolidation, while the market again is saying, is Bitcoin value at here? Probably considered a little bit too pricey, up in the low 71 region. So it drives itself back down. Where you see the market hold, in this case, which was roughly in the kind of mid 50K area, the market made a decision there that was value for that asset. Struggled to really get below that. And then when you see these big breakouts again, the whole hope here is that you see something like this, right? So you see the big consolidation like we got here, like we got previously here, and that the market considers this value. You see the breakout and then price moves higher. Now, the issue with that is there's so much information and data that we need to plug into that to understand it. Ultimately, interest rates pretty much drive the markets. It dictates the amount of money that people have, how appealing it is to keep your money in savings, the disposable income that the average person has, which then all plugs into inflation data, which tells us, how much money does the average person have, the average, British person, American person, Chinese person, etc. Right? Now, the more money that people have, which is why in times of quantitative easing, when we see the money printers going on, think about times like COVID, is very, very good for speculation. Therefore, money starts to pour more into risk markets as people look for supernormal returns or above average returns. Now, in times of quantitative tightening, the opposite is true. Those kind of risk markets are highly exposed. Then what happens is they start to come under the microscope and come under scrutiny for how they're performing. Earnings comes a lot more into focus. What's their valuation versus their turnover versus revenue, etc. Then what happens is the market tends to find an equilibrium of true value. And for me, I just don't think we're quite there yet on Bitcoin, especially when we're struggling against the tide of, and I'll just use the S&P 500 for an example. I do typically use the NASDAQ a bit more. But when we're swimming against a tide like this, right, so trillions of dollars every day flush through these markets, considerably more than obviously all cryptocurrency combined, considerably more. And while it's very, very difficult for these markets to catch a bid, then, it's not a completely correlated point, it goes in and out of correlation. But while these are weak, then there's a real concern over, beta risk assets like crypto catching a bid. You'll always get these outliers, right? And news events will pump the market, news events will dump the market. But for an overall kind of recovery, I really want to see the S&P 500 back above 5680, which is this kind of level here, showing us that, okay, we're back above. Maybe this is a deviation below here. Price comes back above and moves. But overall, to answer your question, hopefully more succinctly, what I'm really looking for is clarity around tariffs and clarity around policy. They're the key things that at the moment that are driving the uncertainty into the market, as well as what I believe is a US government attempt to really drive the bond market down, as well, as controlling the dollar index. All right, so just going to bring this up for you here as well, so we can see a weakening dollar. And you might think, hang on, the US surely want a strong dollar, right? And actually they don't. It can be really negative. It can have a negative effect in terms of trade, right? So they want the dollar to be controlled, but they don't want it to be overly strong. At the moment, they want a weakening dollar, they want weakening bonds so that they can refinance the debt a lot lower. Then what we're looking for is the catalyst to hit the market, that they're ready to buy those bonds back. And by doing so, that they're going to implement quantitative easing. Now, it's not going to be as easy as that, because Trump would basically be doing that pretty much already, I would imagine, or as soon as he can. But the Federal Reserve don't agree with that, because they're worried that if they relax too soon or too quickly, so it would be more accurate, then what that will do is drive inflation up. And ultimately, that's really, really bad news for everybody. And America drives towards a hard recession. All right. Now, I'd love to remember the person that told me this, but an old school finance guy. I'm very fortunate to know some really, really good people in London involved with the stock exchange, the market, and meeting up with other really good people in the space as well. And it was recently we were talking about this, and they said that when you're in the times of real uncertainty like this, and you're looking at policy, you're looking at tariffs, you're looking at these kind of things that are very difficult for the market to price in, often you want to try and look at the person and play the person. And one thing I would say about Trump that we were discussing was the idea that I don't think he wants to be the president to drive the US into a recession, right? I think he's trying to be very clever here. Whether he pulls it off or not, I don't know. Only time will tell. But ultimately, when we see the money printers start to come on in the US, we see them starting to refinance the debt. I think that's when we get a resurgence in these markets, okay? Obviously, there's other factors to plug into that. There's geopolitical risk with escalations with what's happening, the sad state of affairs between Ukraine and Russia. There's the risk of that kind of spilling out further into Europe. There's obviously everything that's happening with, again, the tragedy that's happening of everything in Gaza, right? I'm not going to get into this politically. I'm going to keep this about trading, but these things obviously do have a massive ripple effect across the world. And we're also looking at things like the Chinese markets being very strong. They are under fiscal stimulus, so they are printing money. They are injecting a lot of money into the economy. Germany's doing the same at the moment. There's a new order that's in place over Europe that I can't remember the name of for the life of me, but basically allows European countries to be more, let's say, to have far more relaxed approach to what they're spending, as long as it's on defense, not defensive stocks, defense as in armaments, which is in direct reaction to the fact that Russia, have tripled, I believe, or quadrupled their defense spend. So, there's concerns across Europe about that. But it also means that they can spend on infrastructure, which is what they are, which is what they're moving to do, especially and very heavily in Germany. NBA Young Believe, how are you doing, my friend? Great to see you here. Thank you for the comments as well, N19. And hello, Seb. Sorry, mate, I didn't see you there. Yeah, I'm going to cover Solana in a moment. We're going to look at Solana and ETH and Horace. Hello, mate. Apologies for missing anybody else's comments that I saw in there. I've obviously been on a bit of a rant. Yeah, I don't think we'll see much more of a breakout until QE starts. Yeah, hopefully in the summer. But so the debt refinancing is actually starting as of next month, right? So as we move into Q2, is when it's really going to start to ramp up. So I think there's a little bit of pressure on here, because I think Trump wants to get things moving quite quickly, and you're seeing that, follow through into the data that we're seeing. Well, not the data, so that's the wrong term, in terms of the communications that are affecting the data. So it's a really interesting one. And Jojo mentions here as well, and Jojo and I have some great conversations about this, looking at the VIX spiking again, right? So we've got the volatility index here. We were discussing this previously, looking at this kind of 20 level. Something, I don't know, you might find interesting or not, I certainly do, is if you overlay Bitcoin onto this. Yeah, so Bitcoin obviously being the red line here. And now if I move this to a line as well, gives you a really good kind of indication. Let me just move this down, Mum. Sorry to be a bit pedantic, but there we go. So you can see this here, like the VIX. All right, so we got Bitcoin. See this here in the red, all right, and this is the volatility index. You can see as this is starting to spike, it's creating real difficult times for Bitcoin, especially in the current conditions. Whereas when the volatility index gets up to the highs and 30s, another key level, when we see this then starting to trend down, this is what gave Bitcoin, you know, and risk assets that breathing space to move a little bit higher. And yeah, the reason a lot of companies are going insolvent. So yeah, exactly. As Jojo said, it's this year, right, that they need to refinance. So it's going to happen in tranches, the first of which, you know, they're looking at Q2. So that's where the eyes are at the moment. So while we've covered that, hopefully you found that useful. And if you weren't aware of that, hopefully a little bit insightful anyway. Hi, let's have a look. Horace, mate, I enjoy your perspective on ETH. Yeah, personally, we'll take a look at that in a moment, my friend. In my opinion, lose all-time POC at 1630. It's bear market territory. ETH BTC looking very, very bad. Yeah, I mean, God, I mean, it's just been, ETH's just been getting pummeled, hasn't it? A very good friend of mine, Ionic XBT, brilliant fundamental analyst, was saying and put me onto this idea recently of using like Solana BTC as a better kind of proxy for strength in the alt markets rather than with ETH, which has just basically just been in this, you know, it's just been getting absolutely pummeled. My good friend Just Pitt, who's a magnificent price action trader who works with us over at the Bird Nest, has had his eye on this for a long, long time. This and the total charts, he reads them exceptionally well. And Jojo here's well, yeah, high yield credit spreads have been rising, and that's also another sign that isn't particularly good. So again, the reason that we're covering a lot of this is doesn't matter what type of trader you are. For me in my career, it's always been so important to frame everything correctly. So taking that high time frame bias, looking at the market conditions, are these markets that are really kind of conducive to holding a risk bid? And if they are, then you can afford to speculate a bit harder. You can afford to hold those positions longer. You can afford to trade with a little bit more conviction to the upside. If those conditions aren't there, then, you know, I am looking to take the other side of that trade. I'm looking to short the risk markets where possible, especially the weakest assets within them, and wait for the market to reach key levels before we then start to see the news start to change. We start to see some policy come in. We start to see some tariffs get announced, and hopefully some QE, which can then start to kind of reinvigorate this market. So without further ado, let's look at our ETH plans. We always use the same charts on here. So let's see if any of the technical analysis paid off. So again, this is the kind of worrying area that I'm looking at here from ETH, and it does really continue to grind down. This kind of bluey grey box that you can see on here was just a key area of interest. It's not something I'm looking to actively trade. It's where I'm looking to take positions. So buying ETH when we have breakouts of these areas. So accumulate some ETH here, here, and here, for example. Yes, it's moving low. It just means that this is another area that I would look to accumulate some. Not accumulating as much as I used to. I hold quite a lot of ETH anyway, but you know, just looking at these kind of key areas, and I do like this consolidation here. And if Raz is still with us, he'll be the first to tell you, on our joint show on a Thursday, always looking for these areas that lead to these really strong impulse moves, right? So just to give you an idea of another area very similar, if we look at this, yeah. So this consolidation before price had a big rip. When we got back here, it's a good idea to monitor this area to see if we're going to get that same reaction. Ultimately, when you lose that kind of area, as we did there, and start closing in below it, you see you have a point of mitigation, meaning that you can then be pretty confident the price is seeking liquidity lower. Okay, so just looking at this across the board before I kind of get too carried away, we can see price came in and had very little respect for the liquidity below these lows, closing below it here. This is what I mean when I say a strong close. This was a nice reaction, had us looking up temporarily, obviously to retest this order block, but we didn't. Price just ultimately sold off really aggressively. We closed a large body candle below these lows, and that tells me that price is then looking for liquidity lower. Where does that liquidity exist? In my mind, below old lows, above old highs, but we're short buys here, so we're looking below old lows. So I'm looking at that low there, and I'm also looking at this low here as a more immediate low, all right? But also gaps, yeah? Now, when price is delivering bearishly, so when we're favoring sells, all right, then I'm focused much more on this side of the curve, so where we're selling off. However, you do want to I still look this side in terms of mitigation, right? So again, we got this consolidation here that pumped price up. So if we look at just basket the whole consolidation together here, just do this in orange. So here we got nice reaction here. Look, not really doing anything too bearish here. Long wicks coming into the area. We see buyers are willing to step in, and it sets us up well for some longs. Again, the reason that when price came back into here, I thought we could be seeing a bit of resurgence here. We've got the gap above, we've got the last low pre-break. We've also, looking to potentially retest this. But what happened is we got a little bit of upside off the back of this and then a really big sell-off. We then had this reaction again here, right? Looking at price to maybe pull back towards the order block. And then ultimately we look to break down. How you kind of play them out, which a lot of people ask me, is kind of, okay, but if you're expecting to be long this week, at what point exactly do you jump ship and then sell off, right? Well, what I'm really looking for here are your kind of structure breaks, normally in and around the 4 hour, which lets me know that that plan is probably incorrect, and actually the momentum of the market is taking it lower. Can also use these previous consolidations as areas of mitigation, meaning that when you see these strong moves through this, look at this whole area led to a big pump. Look at these long downside wicks, the absorption, price setting higher highs and then pumping off the back of this. Then look at this candle. It just closed straight through it. And it kind of tells you that that area is no longer holding and price is seeking liquidity lower. So all of our kind of higher time frame is telling us the price is looking lower at the moment. So let's take a look at this over here. What was the analysis going into this? What are we holding? What are we not? Well, we can see what we were looking at down here. These will be on a lower time frame we'll look at in a moment. But again, we reacted at the key level. Like I said, higher time frame, we want to see these areas recovered. We started to close above, the down close candles, setting order blocks, retesting these areas along with bullish gaps. I just want to respect what the market is telling me. It's telling me these are a good area for longs as long as we hold. If we don't hold and we close below, then we look lower for the lower liquidity. Price coming up, we then set this order block. Our plan for quite was looking for price to come in and target these equal highs, which we had this beautiful move up. You can see it in the previous Bitcoin reports. You can see it all throughout the channels of the analysts as well, over at the Bird Nest Discord. And then we'll look at this in a moment because this was on the 4 hour. We then failed to get and hold above these equal highs, closing back in. It's at this point you start to see that weakness. It's like a good range trade. Price is consolidating in here. If you deviate a level and you're coming back in, always reminds me of my really good friend Trader Dank and his story about Johnny and the pizza. So I'm not going to tell you that story, but I would recommend reaching out to him and asking him about that, saying BC highly recommends it. What I'm looking for in here is weakness because prices climbed back below this level. If it was strong, why didn't it hold? Why didn't the buyers step in? The next thing, and one of the key things that I always look for, and anybody that works with us or is a member over at the Bird Nest will probably tell you, they get sick of hearing me say this, but inversion gaps. Bullish gap, price closes below it. We look for this to be the early stage of resurgence if it's at the lows, or reversal if it's at the highs here. All right, so we close below, price is selling off, set the bearish order block, selling off again. Now for me, the point that I was kind of interested in seeing if we got any resurgence was this. Now, very clearly, these kind of internal lows and highs, when they're against the trend, I don't have as much expectation for a reversal to happen here as I do at the extremes, So this is what I'm really interested in here. Now, we got an initial okay reaction, but closed below this here, which just makes me think even more so that we're now heading down to this. Now, this was also a key untapped swing low, meaning that areas that get interacted like this can often be good points for continuation. So with where we sit at the moment on a daily scale, I think price could quite comfortably, let me move this out of the way, draw back towards this bearish gap here, right? Or even higher towards the bearish gap that's up here. But ultimately, this is the level that I'm looking for price to take out, which is 1756.97, or in around that, call it 1756. If we then see a nice sharp recovery of this level, we can then look on the lower time frames to look for structure to build, all right, and then look to trade that higher. Until then, really, any longs here are a little bit treacherous. Let me show you my thoughts here on the 4 hour as well, and what we were looking for here, right? That's why that green box was there. I told you we'd come back to it. It's why we leave everything on the charts, right? Never be afraid if you're wrong. Never be afraid to kind of take that information and make sure you work with it. We were looking for this here. We had a lovely expansion, looking for price to come in here. So we were looking midweek, you know, Tuesday, Wednesday on, intraday here, looking for long setups. Got some intraday longs, got stopped out. Price came in, inverted this gap, looking for this to be retested, which we can see here. We can also draw this across, which is inversion, which is an inverted gap as well now. And we can really see the resistance starting to stack up here. You then add in this bearish gap, which delivers price beautifully into these lows, and then level to level, we're just trading it down. So in terms of recovery here, what do we want to see? Well, quite simply, what is quite encouraging is quite a lot of long downside wicks here. Right? Okay, that can also be to do with liquidity issues, but in terms of a resurgence, there's nothing here on the 4 hour I'm seeing that gives me confidence to trade this early versus needing to see this daily inversion. Yeah, if we had an inversion here, say we had a gap here that we could close above, I would consider intraday longs into this area. But ultimately, the daily gives us the clearest point here, which is if we close above that, we could look to take some longs, again, tentative, into this inefficiency up here, into this gap. But realistically, whilst we're delivering bearishly, whilst the bias in the high time frame is bearish as well, this is much more of a likely play for me at the moment, unless we really do reverse that, invert this, and then use that as support and start to try and build a little bit higher. Jojo makes a good point here. You need to know 3 things, whether it's risk on or risk off: high beta versus low volatility stocks, high yield bonds versus treasury bonds, EW consumer discretionary versus consumer staple, and VIX above 20. Yeah, it's a really interesting point. Very much kind of like a traditional market view there, Jojo. I use kind of a mixture of those as well, but also kind of looking at the strength and that, especially at the moment in things like the treasuries, to try and help us paint that picture of risk. But I think that's really, really good advice. So anybody that's kind of interested in knowing more about that, it's a really interesting way to kind of look at the markets and give yourself sometimes a little bit of an edge. So 4 things. Yes, sorry, I was reading through that in my head then, Jojo, so good correction. So Seb, another good question. How do I think the month will close? No, I haven't covered that actually. It's a really good reminder here, Seb. So we'll finish up with that monthly close, and I'm going to talk to you about candles and how we read those. Anthony, hello to you as well, my friend. So hello, beautiful people. This cycle of bearish, my first time, is madness. If you're making a new lower low, you're going to history to make the target. No, so I mean, basically, when you're looking, if this is what you're asking about, Anthony, when you're looking at market structure, it's an interesting one because you've got market structure, you've got obvious market structure, you've got things like microstructure and that as well, mate. I know you're with us at the moment over at TBN. So, yeah, do feel free to reach out about that because we do have courses on that too. But ultimately, my concern, if we do set this lower low, yeah, I would still want to see a good close below this to think that price was going lower down to here, yeah. I think it's more likely that we see some kind of wick above or a reverse of what we saw up here, which is where you get the close below, trap. In this case, this is a really good squeeze up here, right? Because people, breakout traders getting trapped here, late longs getting trapped, and then ultimately they then get taken out. So seeing something like that, we can still set this lower low. But, you know, if we are looking for a real kind of structural recovery, then, you know, we need to, you know, be coming off and setting that, going from a higher high to a higher low, and then looking to break this area of structure before we're looking to move a little bit higher. So as Seb put on there as well, let's just get rid of all of this for a moment and move to the monthly. We'll do the same here on Bitcoin. Now, this monthly close is obviously looking a little bit ugly. And this drop here is starting to look very similar to this kind of move. Now, obviously, this didn't happen from taking out a high. This was a continuation move, but it was still a continuation move from liquidity, right? So it was from that bearish gap. So what I'm looking for here is, you know, obviously from a bullish perspective, I'd really want to see a recovery here because at the moment this looks super, super ugly. We came in and we took out this low here, right? Just hide these for a minute. We came in and we took out this low, and we had this reaction again, kind of thinking, right, after a massive sell-off like that, big bearish inversion of this gap, you know, can we now hold? The fact that we're closing back down below this level, I would not want to see this candle close below this gap, although I do feel like at the moment it really does want to, and it looks, you know, probably, I don't know, from an odds perspective, it's probably a little bit flat at the moment. We do also have this secondary gap down here. Now, why I was looking forward to this level being engaged with is because we also have this order block that wasn't retested, a monthly order block, right? Hang on. Interesting, not sure why that's not going on there. But anyway, let me pop this back on. So you see the order blocks on my chart as a thick black line like this. Price closed above it, but this was the first retest, and I really wanted to see something quite strong here. Yeah, just popping in, coming into this level, and then kind of seeing some kind of reaction. Again, lots of buyers in here that caused this massive move higher. So would really look for this area to add some kind of support. If this box does close purple, it means that we've inverted this gap and the price could easily be looking down towards these levels. But, you know, ultimately it's a big bodied bearish candle with a long upside wick. There's not too much to say that's bullish about that, unfortunately. So we do need to keep an eye on that, that's for sure. Yeah, why not RSG, the old 3 month. So 3 month is about to set a bearish engulfing candle, all right, which is normally not a great sign. Okay, you know, obviously you can see here bullish engulfing off of that, bullish engulfing off of that, leading the market higher. We didn't really see any bearish engulfings here, so this could be, you know, the first quarter or 3 month candles. The quarter looks to finish very, very bearish as well. However, where we need to be cautious is, especially if you're coming into a key point of liquidity like we did with this sell-off here, you look at the quarterly close here, the 3 month close, it looks super bearish. Ultimately, we've just had a retrace here, reacting from a bullish gap and moving higher. I don't really pay much attention to the 3 month, maybe, but it doesn't mean that it's not a time frame of interest. For me, I kind of stick to what's in and around my system. So I'm looking at the weekly, then I'm looking at the 4 hour, and then typically the 15 minute, or I'm looking at things, say, like a daily, hourly, 5 minute, with more of a focus on intraday. But for more of my kind of higher time frame picture, definitely factoring in the monthly. And the monthly, the quarterly, they all look pretty ugly at the moment. All right. Now, on Bitcoin, it's a little bit more interesting here. All right. So if we look at this here, now we can see, if we look at the weekly gap, we extend this out and we've got an even bigger monthly gap here. And obviously the monthly just looks a lot healthier than ETH, right? Higher high, higher low, higher high. Price would need to come back down below this low before even shifting market structure, let alone breaking it. All right. So at the moment, this is at an all right level. Again, I would quite like to see, you know, Bitcoin in and around retesting these highs here. Also this monthly order block, which it never tested. So I do feel like we could move lower here. But again, tricky, you know, it is always tricky when you're looking to kind of jump on board those kind of larger moves, especially when they're down towards the bottom. So monthly close here looks like it could be a doji as well, which kind of, you know, there's a little bit more wick to the upside here, showing the selling pressure is a little bit stronger. But what I would say is that ultimately, if we look at this here, we took the prior month low, we've managed to recover the prior month's low, which is, you know, a bullish sign. I don't know what's going on with TradingView today. It really doesn't like my my lines, right? But yeah, here we go, back above here. Ultimately, doji candles are typically a sign of indecision, like we see with this one here, like we see with this one here. If the body does manage to get much lower and it becomes more of a pin bar or hammer candle like this, imagine that inverted, or like this one, normally a sign the absorption from the high is pretty strong and the price could be looking to move a bit lower. So let's look at Sol. And we're going to finish up with, what are we looking at Solana on then? Oh no, that's why USD, wasn't it? There we go. So Solana holding this area at the moment becomes a little bit more clear on the weekly and obviously on the daily. Again, a little bit of a move low. This becomes a bit more dangerous, like a bearish pin bar. But we're holding this area around here. The area I really wanted to see Solana sweep was 110.1. It's that monthly low down there. But again, off the back of a big bearish engulfing candle last month, we've got that bearish continuation again through into this month. Now, looking at the weekly here, Yeah, I mean, obviously, as we've seen on a lot, right? We saw that big reaction wick here, finishing a nice bullish hammer candle, again, pin bar that was just obliterated off this. Now price is kind of just holding this level here. We saw a little bit of a pump, so we saw a drop off again. I was actually looking for this week to really kind of drive down into this level. That's a really bearish candle here. Again, pin bar, short nose, decent body, or an inverse hammer. Taken out liquidity above the prior 2 weeks high, and now really looks to kind of be driving down lower. On a daily scale, however, and we can see the good high quality squiggles from before, looking for price to come up to areas of rejection and drive lower. We're looking for similar in here. And again, this is, you know, the early stage of these things happening. Often start with these inversions, right? Looking for that, for bullish continuation, for that area to hold. Price closes below that, and now is gunning out the liquidity below these lows. In terms of plays, if I am expecting this to continue to be bearish, again, there's a lot of things we need to factor in, like news and bits and pieces as well. But this looks like a pretty decent area. We've got this bearish gap here on a daily scale. It starts around about 130.4, 130.5, depending on what exchange you're on. Price could look to draw back towards that before selling off. In terms of switching bias here, I would want to see price close above this gap, you know, doing a reverse of this inversion, looking for this area to hold as support before considering plays any higher. I think this is the next downside target of 121.84. On a 4-hour scale, you can see this as price came into this over the weekend, just this really tight consolidation here on Sol. So it's not really telling us a lot, although I think, you know, for any early stage recoveries, you would want to start seeing these down closed candles closed above, see if this works. It did this time. So again, getting a close above this, then look for this area to hold, and again, just trading this level to level, right? At the moment, it's not the time to start getting into major swing plays. I don't mind adding some position plays down here, as in terms of adding to some longer term bags. I think obviously we'll see recoveries in Sol, Ethereum, Algo, a few others as well. Still looking at good AI and AI agent projects as well. But, you know, that's a long-term hold. I can't say when the market's going to turn. But what I do know is that, or what I assume, or what I'm kind of using my analysis to work out, is that some of these projects, if they're good and you get that flight to quality and they've got good teams, they've got good application, you know, then ultimately they'll recover at some point, right? So it can be a good time to add those to your balance sheet when you reach key levels. Really still looking for this to get taken out. A lot of liquidity resting below these lows as well. So going to be patient and watch to see what happens when we react here, or when we get here. Any strong breakout of this area here and this order block, I'll look for retests here and maybe consider intraday longs. All right, legends. So just run over by a couple of minutes, but we were for 4 or 5 minutes late to the show because of technical issues. So hopefully that covers off those points for you. And what we're going to do is going to be back live with you all on Wednesday. All right, obviously, if you are a member with us over at the Bird Nest, or if you're interested in joining, you can find all the information in the description lower. We're going to cover Wednesday with our alt request Wednesday. So if you do have any tickers you would like me to take a look at, please do let me know. And then from there, I'll be live with you all for members anyway over at the Bird Nest. We continue our live trading. We finished up March about plus 9.5R, I think. So not one of our best months, but just approaching 90R year to date. That's the last 12 months, not since January, I'm afraid to say. Yeah, so we're looking to really kind of kick off and drive that up to 100, and then we'll probably look to start some challenges soon as well with you all. So do stay in touch. You can follow me on Twitter as well, BC_Richfield, and don't hesitate to reach out. And I hope to see a load of you over with us at the Nest. All right, have a fantastic day. Do keep an eye on the markets, trade carefully. Often a good idea to see how Monday kind of plays out in terms of the range. And we're talking about 27 minutes now until we get the US pre-market open for equities. So let's see if we get that injection of volatility, and also make sure to keep an eye on the news. Have a fantastic week ahead, legends. I look forward to seeing you all around the Nest.